Okay, hello and good day to everyone. That is you tuning in here at the Sphere Rocket Podcast Network. Once again, I'm going to be the host for today's episode. My name is Dwayne, and as I've mentioned, we have yet another exciting episode made extra special by our guest today by the name of John Way. And who is he? He is the driving force behind the stick. Kind of mouthful to say, but I hope I get it right. Astute Quity Holdings LLC. As CEO, he's led the firm to acquire over $80 million in assets and 600 plus units, focusing on value added real estate in Dallas Fort Worth. With a finance degree and a certified financial planner title, John knows how to deliver strong returns for high net worth investors. So get ready to learn more from one of the best. John Way, how's, how are you doing today?
Doing good, man. Wayne, thank you for having me.
Yeah, nice to have you. And I hope I didn't butcher the name. Astute Quity.
No, you're not the first. Astute equity with one E in the middle. So yeah, totally. You got it right.
I kind of combined astute quity. Okay, astute
Yeah,
equity.
yeah, astute equity. No,
It's
no, no
actually a lot
worries.
more easier now that you mention it. Okay, so I guess my first question is, what is the best place for you to have a vacation after, let's say, a successful month in your business?
uh, so my business is and what I do, it's a little bit of a not seasonal, I would say. It's more so it's like every project is about three acquisition project. It's about 2 to 3 months. So after my acquisition, I would potentially take a break to Japan.
Okay, right from the get go. Are you Japanese by any chance, or
No,
it's
I'm Taiwanese, but I go to Japan quite often.
see, if I may ask, what's so special about Japan that you love about going there every time you have the chance to on a vacation?
Yeah, I've been going to Japan for 20, actually no, yeah, 22 years straight. And it's just the culture, the people, the food, just everything about there. It's just it's my favorite place in the world, I think.
Okay. I mean, if you've been going there 22 years straight,
Yeah.
that's definitely one of your favorite. I mean, I can barely attend favorite place in the world like once a year. I mean, I'm kind of
Yeah.
lucky.
Yeah.
And pretty much Japanese food. Oh man, I think about sushi. I think about ramen and all those delicious things and the seafood. Oh, I'm getting hungry now. But
Yeah, yeah.
but that being said, you said I guess your business. It's a bit unique in a sense, but before that, can you tell us how you got into this business in the first place?
Yeah. So, my first career, I was a financial planner for about 20 years straight. And towards the latter half, I think latter third of my career, I had a lack of better term, occupation fatigue for my first career as a financial planner. And so, I've been listening to Bigger Pockets podcast. It's like a real estate podcast, and learning about more about everything real estate. And when I back in 2017, um, 16, 17, I kind of got decided to kind of jump into the real estate world in terms of investing, and I got into like a project on my own in Atlanta, Georgia. It was a 14 unit like student housing complex, and it was probably the best and the worst experience ever for myself. Best in the way that I learned so much from that experience. Worse than that, anything you can think of a tenant can do to you as as a landlord, I have probably experienced it in in those 2 years. And so from that point, even before that, I kind of knew that I wanted to get into bigger projects because of there's so many reasons. Economies of scale, um, tax advantages, just the list goes on. But so the 14 unit wasn't really big enough for me, and I'd made money from it. But then it was too much headache. And so I kind of knew that I wanted it to go bigger. But what I knew back then was that bigger the projects doesn't necessarily mean more headache. It's actually less headache. So it's all because of economies of scale. So essentially, I after the Atlanta project, sold the Atlanta project, decided that Atlanta, Georgia wasn't really my market because I live in Northern California. So I decided to kind of narrow down my market, did a lot of research, narrowed down the market to Dallas, Texas. And once I decided on the market, I um, decided, long story short, is I decided to join like a mentorship program, coaching program, and to get myself up to speed in terms of education, management, operations, just so that I can be in the same playing field as some of the bigger players in that market. So, and that was really the beginning of my building my current lack. I don't think I have an empire yet, but pretty much building my current business for the last 6 years, 5 6 years.
That's quite an interesting introduction to your business
Yeah,
because
sorry, it was a lengthy one.
yeah, in a way, no, it's good. And you know what? One thing that I always hear from a lot of people, and based on my experience, you learn the best in the worst kind of experiences.
Mhm.
And I guess in your case, having handled, the first, it's not a small one, but definitely a bigger project compared to what most people would start off with. And, you made money from it and it gave you some headache. Normally, people would deter from that idea. You know what? I think this kind of stuff is not for me. It's too stressful for me. I guess I would just move on to another field. But you kind of double down and instead of like choosing a new career path, you decided to take on a new project and maybe thinking it would be a lot easier. So, what was the silver lining that you saw in that first project that you think that this is for me, but not just this is not just the best project for me, but there's something better that I can take.
Yeah, great question. So the 14 units was a headache over a 2.5 year hold time. Um, I doubled my money, um, but the doubling of the money wasn't really. It was actually really based on net operating income. So essentially, when you do multifamily, that's what it's called in business. It's really based on your purchase price, your sell price. It's one key ingredient in the composition of the sale price or purchase price is your net operating income. So profit minus expenses, and that's your net, right? So basically, from that first project, kind of knew, like, I actually brought the net operating income from, let's say, $4,700 per month to about $9,500 a month. And so, and it was a creative ways to make more income from the property. Um, and then once you have more income, you can generate that much more value, and you can, when you sell it, you basically realize the profit. And so it's called in our industry it's called forced depreciation. So in that sense, I kind of knew, 14 units, I can get this much money in a short period of time. A short period meaning like over 2 years, right? Now, if I have 100 units, what if I have 100 units? If I did the same thing, I would be doubling a bigger amount of money, right? So it's that's the mentality of doubling and in a short period of time, and you can force appreciate. It's not just, when you buy single family homes, you're just putting it, you buying it, and then you're depending on the market or whatnot to have appreciation of value. But
Mhm.
in multifamily, there's the timing of the market, the the market can grow along with that in turn help your property grow. But the other factor in multifamily is forced depreciation, is your ability to grow the income of the property, and in turn you can add more value in terms of potentially in the millions, to your earnings, to your bottom line.
When you say income of the property, does it mean like, the people renting, or are you using it for commercial things?
Yeah, people renting from you. From a from like the example of my first project, before I bought the property, the property only had like about 6 people living in there. And then when I was done with it, I had 14 people living in there. It was just a bigger, it was more income, right? And more people paying your bill. So, and giving you an income stream.
I see. I guess you're helping other people, like making it more affordable by more people living in the same place, but the entire rent still increases because yeah, it's
Yes.
still the same amount of people in that area. Okay,
Yeah,
that's interesting.
improving. Yeah, it's all about like improving creating housing for those that are in need. And actually, for me at the time, it was students, because it was my property was in the middle of like four law schools, so they need housing in that area. So and that in turn was a great idea.
Yeah, I think that's the best ones for students because they're not really picky about the quality of the place, but they wanted to save money to have as much as value, especially for
Yeah,
saving in the
exactly.
future.
Yep.
And I guess right now you're also targeting people that are working in the working class more than just students now.
Yeah, so I'm actually not no longer in the students housing game, just because I decided not to after that 2 years. It's just too much headache, and I think there's all kinds of other things that you have to worry about. But now I focus primarily on workforce housing, and that's blue
Mm.
collar here in the U.S.
At least you're more sure that they can afford and pay on time if it comes to people in the working class.
Yeah, yeah, it's primarily what we call Class C and Class B properties.
Okay, and so yeah, that being said, to clear up the people, this kind of business does not only apply to students, but right now he went full on to the workforce, so it's
Yeah,
applicable for everyone. Even if your property is in the middle of a place where there's no universities, if there's a company there that people are working, then that's definitely something they can afford.
yep,
And that
definitely.
being said, how were you able to first get your clientele? I mean, starting off must have been always the most challenging part of the business is to start. So, how did you first got your first few clients or properties that you got?
Yeah, that's actually a great question. So when we our very first project, so after I finished my 14 unit, after I joined the coaching program, the mastermind, I got to know my partners, initial partners, and decided to do a deal together, and that deal was 167 units. So it went from 14 to 167 units, and that's between spread across two different properties, the sister properties. Um, Now that there was a, it was yeah, you're right. The first deal is always the hardest one. And for us, the hardest one was really the raising of the capital, because before that you never raised money before, raised money for anything before. You just buy things on your own, right? Typically. Now when you are raising money for the first time, your mentality is mostly, hey, I got this project, but I like your mentality at that time. Most of us, my partners and I, mentality was like, oh, we're asking people for money, right? We're asking friends and families for the initial capital, along with our own, of course. But asking your mentality is you're asking them for the money. But like over time, like think about it backwards now, like hindsight's always 2020. Like we are actually providing an opportunity for people to invest. Um, and actually, these are great opportunities where they don't have it anywhere else. So, it's actually a shift of mentality. But when we first started, that was it was probably the like a lot of my white hair from that from that from those transactions.
I can only imagine like trying to ask people, I mean, family members for money. I mean, in a way, I guess you're gonna kind of feel shy about asking, but it's part of the business. If you wanted to raise money, you need to get out there and at least be confident in whatever you're trying to raise. And I guess anyone who've raised with you based on the success that you've had in your company has made money. So I guess they should be thankful that you give them
Yeah,
an opportunity.
yeah,
You know?
like initial project, friends and family that invested with me, they were doing me a favor, right? So at the time, but now all of them have made money, like are collecting income, and they see they tasted the the fruits of the labor, if you will, and now a lot of them are wanting to invest more potentially, when I have with like other projects right now. So
Again,
yeah,
it's the
it
first
worked out.
steps. Yeah. It was the first steps, but as soon as you got it established, as soon as you've had your portfolio that you were able to present that, hey, I was able to grow this to this now, and these are the people that were successful with me. It's a lot more easier to sell this to a lot more investors. That is when you're able to raise a higher capital and be more confident to be exposed to higher people. And
Yes.
that being said, how long is your business has been around?
So I started my like the official astute equity hold. I started that company since 2019. But then I that was around like 2018, 2019 was when I first got into multifamily business. And it was about a year and a half after that I got into my first like multifamily project.
Okay, so around more or less 5 years
Yes,
in
yeah,
in total.
somewhere around there. Yeah, 4 or 5 years.
Yeah, so 4 to 5 years. Were you like a one-man army the entire time handling your own business, or did you at some point started hiring more people in
Yeah,
your business?
so in the first actually all the way into up until so like with multifamily syndication, you work as a team. And for the first few projects, I partnered with different partners. And in terms of my own, like in terms of Astute Equity Holdings, I was a one man shop. So like basically, I partnered with different partners, and we just kind of divvy up our job. But it's been like, but then that's sort of only building the portfolio, right? So in terms of putting the deal together, raising the capital, buying the project, and operating the project, and that's sort of operations, like operating the business. Up until this year, I decided to pretty much dabble in virtual assistant and actually adding virtual assistant to my team. And the reason why is because I'm sort of at the stage of my I guess this by for this is now a career, second career, in that I feel like this point in time I can actually grow. I could and can start to grow my brand and grow my public appearance, and grow my awareness, like brand awareness on the internet, on all the social media channels. And for me, I don't know how to do that, so basically I leverage my virtual assistant.
See, that's the thing about hiring an assistant. I mean, you could do it, but
Yes.
it's not your specialty. If you could hire someone who has been experienced with doing that, it's gonna be a lot different. I mean, sure, people are gonna think, okay, I'm gonna save a lot more money if I do it myself, but the quality of work that someone specializes in it, and of course, the amount of time it will save you, it's worth it for a lot of people. I mean, I'm not saying that everyone who had virtual assistant were successful, but for the ones that did, they can definitely say that it's worth it. And I guess, John, you're one of those people who has success with virtual assistants. And with your virtual assistant, if you can share with us, how long have you had your virtual assistant?
I haven't had my virtual assistant that long. Probably for the I would say for the last 2.5 months. 2.5 months. It's not long, but
Ooh.
I can tell you that I'm amazed at how far uh, she's done for me. Like how much she's done for me, and also how even though it's only been 2 months, like my social media presence is it's it went from like zero, right, nothing, to now like I have over 100 followers. I have like both. I mean, on all the different channels. So and I'm posting it. Well, not I am, but like my virtual assistant is helping me post on a daily basis and on the different channels and coming up with my social media calendar and yeah, it's been great. Like that working relationship and what I want the VA to do for me, it's kind of exceeded my expectations. So it's been awesome.
Yeah, glad to hear that you have that, and definitely have a lot more free time to go to Japan or have a vacation. Doing
not,
that.
not yet, not yet.
Ah,
I'm
yeah,
still building the business, but like, yeah, I'm
it's
probably
too
gonna take
early
a
yet.
trip at the end of the year.
Yeah, but of course, to be able to discern the difference that virtual,
Yes.
someone, an assistant is able to make, even if it's a virtual assistant, someone you don't see eye to eye yet, make this kind of improvement to your business means a lot. And
Yeah.
I would like to ask a question. So, why settle for a virtual assistant compared to someone you can hire locally?
Local hire is I mean, especially here in the Bay Area, it's really pricey in terms of like what we're able to like hiring a marketing manager here is like way too expensive. So and the VA virtual assistant is actually, especially with some like a firm, like a reputable firm that's able to provide you with quality VA at a fraction of a price. It's and the value you get from that, it's just you can't beat it.
Yeah. I think that's what a lot of people who wanted to hire a virtual assistant, and they would settle for directly hiring someone. And we're not against that idea. You could do that rather than paying extra for a firm. But there are pros and cons to everything. But what hiring a firm like Sphere Rocket does is we filter out hundreds of applicants that you would manually do. It takes you like lots of hours, maybe a month to find the perfect person, and we screen everyone. So basically, filtering out, making sure that nothing suspicious is about this person, and we train them. So it's basically just cherry picking for you when it comes to picking your own virtual assistant. And in your case, how was the process with Sphere Rocket when you got your virtual assistant?
Yeah. Actually, that's an interesting story, actually. So, I interviewed actually before, I interviewed Spear Rocket as it came as a recommendation from one of the programs that I joined. And I interviewed 10 virtual assistant companies before deciding on Spear Rocket. And I mean, various reasons, cost and value and process and all that support. So, um, and then when I decided on Spirit Rocket, I went you know initiated the process and interview and all that. So I actually conducted a two interview process. And so basically the first interview was I had like you guys had set me up with like 10 prospects, and then the second interview I sort of narrowed it down to like four prospects. And actually from that process it was pretty amazing because from the first interview I had four prospects that that I all thought were really really good. They all had different strengths and weaknesses. I mean, different strengths, I would say. Um, and then over the weekend, I gave them a project, like a small project, to kind of research and present for me at the second interview. And and when and let's just say after the second interview, I decided to hire someone that I didn't think that I was going to hire the from the first interview. So it was I'm glad I did it, and actually it's amazing. I mean, it's she's great.
It's great. I mean, based on the results that you've been talking about, especially in those social media presence, it definitely shows the success. And it's good that you have that second filtering round because first impressions definitely last. But if you wanted to be extra sure, have a second thing, and who knows, maybe something might change your mind. And I guess that's also an advice for would be anyone who wanted to hire a virtual assistant. You wanted to at least not give in to the first one, but try to give a second thought because maybe someone else is more deserving of that. And
Yeah, it was. Yeah, I think like for me, the second interview, my now virtual assistant, she she showed me through her work, um, that she really wanted the job, and it wowed me, like, from when I saw the work that she presented, from just one weekend. I was like, "Whoa, this, like," uh, I wouldn't have asked her to do that, but then it was amazing that she did, like, so, yeah, it was really, really awesome.
and if you would have one advice to any would-be virtual assistants to give them a better shot at getting hired by a business or anyone, what advice would you give them?
Uh, I would actually say, depending on who your prospective employer is, I would, besides doing a lot of research on the prospective employer's business, where they are, their online presence, and depending on what they're hiring you for, I would just do a lot of research on that particular area that they are looking to hire for. And then even beyond that is, like, what are some other areas, like, comprehensively, when you look at the prospective employer's business, what are the, like, do a SWOT analysis for that business, you know, do a comprehensive, like, study of the business. And so that they know that you care about the interview, not only the interview, but their business. And and that will go a long way, because it's part of it is about your, like, you know the VA skill set, their own skill set, but how does the skill set complement the employer, like what they're really looking for? So I think going that route, thinking in that line, along that those lines, I think it will be very, very helpful.
Yeah, you can't be too prepared for. It's hard to be too prepared for an interview. I guess it's
Yeah,
best
it's exactly. You're right.
unless you're really stopping down to the personal information about a person, then that's too much. But as long as it's within the business, it shows that you're hungry and you're prepared and you're willing to learn more in the rest of the business. So
Yeah,
yeah, that's one
that's
tip
right.
for you
That's
guys.
right.
And
That's
going
right.
back to your business, so you've mentioned that it's still connected with real estate. So which kind of people are your target here as your client or clientele?
Uh, I would say I have two two types of clients. One is the clients, my tenants that lease from us, that lease our units from our buildings. So we buy apartment buildings for these tenants to live in, right? So the tenant is a client. Um, that's one side of the business. The other side of the business is our investors. So basically, when we find I mean, along with our own money, but we have investors that invest along with us. So, as a, in a syndication. So when investors invest with us, that's also um, another client of ours. So we have a couple hundred clients now that's invested with us over the years.
Hey, and That being said, what are the qualifications, if you may ask, for someone who wanted to, let's say, rent out their property to you? Do you take full management of it, or does the person owning the property needs to sell it to you, or can they have partial income? You get what I'm trying to ask?
Yeah, yeah. So we for our projects we use so when we take over a property, we buy it from the owner, right? So whoever the owner is, they sell the property to us, and we basically take over. When we take over, we have our own management team, and that goes into the property, and they are our face to the tenants, and so they help us to with with the day-to-day management of those properties. um, and so that's how we sort of take over and manage those properties in the long run.
See, and if you can try to convince some people, why should they, resort to renting out their properties or being, selling it to your management compared to just, selling it off to someone else in terms of that?
Oh, you mean selling the property to us?
Yes, for your own management compared to just handling it themselves to make profit from that. What are the
Uh,
benefits?
so depends on the market. Like there's in the market that I am focused on, Dallas Fort Worth, there's a lot of there's there's a I should say tens of thousands of apartment complexes in Dallas Fort Worth, and and so any given time there's products for sale, there's off market deals, there's on market deals. All of these transactions, most of them are being done by the broker. So essentially, the broker would facilitate the buy and sell transaction, and basically, we as buyers, we would essentially work with the broker to buy the property from the seller.
Okay, so that alleviates a lot of the headache compared to them doing it all the process from themselves, like the
Yeah.
people handling it. I
Yeah,
see.
yeah, definitely, definitely. It's already a lot of work actually. Even when you're going through a broker, there's a lot of T's that you have to cross and I's that you have to dot. So like, you there's already a lot of work. So it's basically um yeah, it's pretty much going through the purchase process.
Yeah,
Um
and
yeah.
oh, sorry. So, what are the best ways to contact you if anyone's interested to avail your services or wanted to, yeah, buy a
Yeah,
property?
so right now, actually, if you would like to learn more about apartment investing in Dallas Fort Worth, please do reach out to us at www.astuteequity.com, astutequity.com, or we have an Instagram page is at multifamily. Uh, your way, multifamily your way. Way is WEI is my last name. Multifamily your way. So that's our Instagram page. Um, and also, I'm actually this year I just launched, decided to sort of build a community for people that want to, I guess, learn more about multifamily acquisitions. So basically, I started teaching, coaching, and for those that wants to get into the business of multifamily, and not just I'm not talking about like 10, 20, 30 units. I'm talking about acquiring your first like bigger projects, like 60, 70, 80 plus units. Reach out to us. Uh, we just launched a multifamily coaching program for acquisitions, so please feel free to reach out to us if you're interested on that as well.
Okay, it's good that you're sharing the knowledge that you've had before because you mentioned that you've learned a lot from the coachings or the coaches that you've learned from, and now you're doing the same, teaching the next generation of would-be realtors, or I guess in your case, yeah, in your specialty in terms of investment.
Yeah.
And I guess my last question before we end this is, what do you think is your passion for still continuing this kind of business after 5 years, and I think you're good for another 5 or 10 more years. So,
I think
what's
so. I hope so. I hope so. Actually, I love doing it. If you think about it, you're doing a good thing in terms of providing housing for tenants that need housing, right? Because housing, apartment investing is a need. It's a need. There's a lot of things in the society where businesses are based on wants, and there's certain businesses that's based on needs, right? So living space, because people can't buy a property, right? So they have to live somewhere, and apartment complexes are a resort that they can choose to live in, right? So, and see that as a need. So we're on in that sense, we're providing housing for those that are in need of housing, right? And also, at the same time, there's like, as investors, as owners, we also win too, because at the long run, when there's increases in rents, um, and I say reasonable increases in rents, um, it's actually, it helps us too, like, because it makes money for everybody in the long run. So, and for me, like, putting these things together, like putting deals together, finding partners, and raising money, raising capital, and this is all part of what I do now. So, like, it's fun.
everybody
Fun for me.
wins too? Yes.
Yeah, it's fun for me. It's like, I wish I knew this business like a long time ago, but I've only encountered it in the last 7 6 7 years. But it's never too late, right? So it's fun. So that's why I
Exactly.
continue to
That's the
do it.
best way.
And you're right,
Exactly. For
5 5 10 more years. That's my time frame.
maybe more. Let's see what the future holds. But again, this is a need, so it's hard to fail in this kind of business once, as long as many people.
If you
And
do it right. Yeah, if you do it
yes,
right,
if you
it's
do it
hard to
right,
fail. Yeah,
exactly. Okay, and
for
I
sure.
guess that is the last part of our podcast. And before we end this, John, maybe you would like to promote anything or anyone at all before we end this?
Um, no, just if anyone's interested as an investor, feel free to reach out to us, studequity.com, or multifamily your way. If you're interested in the coaching program for multifamily, you want to get into multifamily business,
How
feel
much does
free.
it cost, by the way, for the coaching services?
My coaching program is 15K.
Okay, so
Yeah,
that's more information. And for more info, we'll be sure to post the links and the numbers in the description to make sure that you don't get the wrong link, to make sure so you can easily contact John here. So,
definitely. Yeah,
John, thank you so much for your time. We got over a bit the time in the
no, no
podcast, but
problem. Thank
I
you.
learned a lot. And thank you so much for your time. And we'll hope everyone has learned a lot in this episode. And we'll hope to see you again in the next episode at the Sphere Rocket Podcast Network. Goodbye, everyone.
Bye bye. Thank you.